Welcome back to the master budget, the creation process, the exercise of cooking hut company. The video clip, we finished schedule the cash disbursement for purchases. Then this video clip will cover the operating expense budget and cash disbursement for the operating expenses. And then I'll jump into budgeted income statement for 3 months ending June 30 for 3 months, the quarterly the budgeted income statement. Okay, before jumping into the Schedule E, the operating expense budget, the month-to-month changes in sales volume and other the cost driver activities that directly influence many operating expenses, right? Based on a certain budgeted amount of sales, we are planned to spend certain the operating expenses, examples of expenses, and then also driven by sales volume, including sales commissions and delivery expenses. Those are included in miscellaneous expenses for CHC in this case, and other expenses such as rent, the insurance, depreciations, and wages are not influenced by sales, right? It's totally the independent, the fixed, the cost. So, but it definitely should be within appropriate, relevant ranges. And we regard them as fixed, definitely. And then the Schedule A summarizes the operating expenses, Schedule E, right? Operating expenses for CHC. Okay, before starting the budget process, let's just review the basic data. Here we go. Okay, wages and commissions. CHC pays wages and commissions twice each month, with payments lagged half a month after they are earned. That means we will use that information here, right? And then the 1/2 of a monthly fixed wages, 2,500, and commissions equal to 50% of sales, which we assume are uniform throughout each month. And then CHS only planned capital expenditure. They cover this capital expenditure into the financial budget later. But I wanted to remember new fixture purchase amount is $3,000 cash in April. And the monthly operating expenses, the paid in as incurred, the 5% of sales for the miscellaneous expense, and the rent, $2,000 paid as incurred, and the insurance expired the next month. Oh, that means $200 is the insurance policy premium by month, right? And then depreciation including new fixture per month, 500. Then let's start. The wages amount is the fixed amount, right? So how much is it? 2,500, right? That is the same amount every month. And the commissions is 50% of current monthly sales. So we will correlate, 15% correlate this commission into sales. Okay, current month. So let's stretch out. So we got it. The total wages and commissions is the sum of these wages and commissions. We calculated that. Let's stretch. So what we need in April to June in total is only 3-month amount. Again, the reason why we are calculating this total amount of 3 months is that we will create income statement, right, for 3 months. So the second quarter income statement needs these total wages and commissions, right? And then miscellaneous, the 5% of current sales we budgeted here. Then let's just stretch. Then that we use the same function. I use just copy and paste and corresponding these functions. This is some functions like this. Then the rent amount, which is fixed amount, how much was it? rent amount, I remember the rent amount, $2,000 rent, right? So rent amount 2,000. So 2,000, then let's stretch. So the sum of this 3 months rent payment is $6,000. Then insurance, in the operating expense, we are not considering the payment at this moment, but we want to just recognize what is the insurance expense. Expense cannot be the same as payment again. So the insurance, how much was it? Okay, here you go, 200, right? So 200. Okay, 200, the insurance amount. Then let's stretch. It's very simple. Then the depreciation, the recognition, which is a fixed amount, 500, right? 500. So put 500. Then let's stretch in the same way. The total amount, we will use that 3 months, the amount into the budgeted income statement creation. Okay, so total operating expenses, just the sum of from this to this. Okay, so that is total operating expense budget. We now calculate it. So sum of this 3 months operating budget is 53,600. But again, before jumping into creation, the constructing the schedule F, cash disbursements for operating expense is not the same, the value as the operating expense. That is actual cash payment. So disbursements for operating expenses are based on the operating expense budget, but it's not the same. The disbursement include 50% of last month's wages and commissions and 50% of this month's wages and commissions and the miscellaneous and the rent expenses. And there's no monthly cash disbursement for insurance because you have to keep that in mind because it is already paid annually at the beginning of the year. Okay, where is the information? We also have unexpired insurance, which is prepaid insurance expense, right? Prepaid means it at the beginning of the year, they already pay this insurance in full, right? In full amount. So the rest of amount is prepaid insurance expense is a asset category. That means they have a right to receive this insurance service. That's why we classify this account into asset, right? So when we create the insurance, we do not include. What about the depreciation then? We don't have any insurance or the depreciation, the cash disbursements here. That's right. The depreciation is not the cash transaction. We just assume that that is kind of an expense, as an expense, because we use this asset. The asset is worn out, so we assume that the value of this asset decreased while we are using it, right? So but that is not actual cash payment out, right? We already pay cash when we purchase this asset, right? So we do not consider any cash disbursement for operating expense in terms of insurance here, and no the depreciation amount there. Okay, so let's jump into this process. And the 50% of last month, 50% of last month of wages. So 50% times, and okay, let's stretch. So we come up with, and then 50% of current month, right? So 10,000. So 50,000 at 5,000. Sorry. And then the total wage and commission actual cash payment is the sum of these two. Okay, then do you see this 10,000? Okay, let's compare this, oh, sorry, this and this. It's totally different, right? Totally different. Then we don't have any April to June in total in the cash disbursement because, again, that is not the source of in creation, the constructing the income budgeted income statement. We will create the cash flow statement budgeted using this information. Okay, so miscellaneous expense. What is that? Miscellaneous expense. Okay, we use that information, nothing different. So just like this. Okay, and then the rent amount. Rent amount is fixed every month. Then we don't have any insurance and depreciation in the cash disbursements here. Okay, so the total disbursement is sum of is 1, 2, 3, only 3 expense. Then okay, so this is cash payment in terms of operating expense, right? This is the value, the not the cash payment, but expense in the budgeted income statement. Those are the difference. Okay. Then finally we finish it. The supporting schedules from Schedule A and F based on this information. Now let's convert this information into the budgeted operating budget, the income statement. Okay, along with interest expense from, but here interest expense we haven't calculated yet, but we will finish until this. Okay, from this to this, from Schedule A, C, or E. Okay, and then that information is that information is a benchmark for judging management performance. Okay, so sales amount from April to June. Now we transfer this information minus cost of goods sold. We summed up on the Schedule B and Schedule C, and then in the Schedule E we summed up all the expenses like this, right? Oh, but I want to put negative sign on the income statement. Then let's just drag, because I believe those information are the same. Okay, and then the income from operations is, oh, the gross margin we missed, plus the cost of goods sold, and the income from operation is sum of this part. Okay, so 3,400 is income from operations. Okay, so less interest expense. We haven't calculated interest expense here, right? Because interest expense is part of financing. Okay, so when we create the cash budget, the statement, we will calculate interest expense part. Okay, so I'm looking forward to finishing this step A on the next video clip, and see you later.